My first post this week was about rail companies and specifically what rail companies are investing in their business in form of capex. We've heard a lot of stories about the reindustrialization that's ongoing here in the US. Recently, in fact, I wrote a post about how many manufacturing facilities we're building up, and that's at a pace basically over 2 times anything we've seen historically. So we're seeing a huge effort around reindustrializing the US. And yet, what I showed earlier this week was that rail companies have not even gotten back to pre-pandemic investment levels. That's not terribly shocking. Rail investments are incredibly expensive. While a lot of this reindustrialization is still in the early innings, we don't have a great sense of exactly what kind of volumes of inputs and outputs are going to be needed to satisfy this new footprint that we're growing and developing. So the rail companies don't want to get too far ahead of themselves and not be able to utilize this new infrastructure that's incredibly expensive to build. So it's not a shock, but it's a good demonstration that this reindustrialization will come in waves. And the rail investment end of this, frankly, isn't even that close to happening yet because they still have to get up to pre pandemic levels and then likely race ahead of those levels to try to meet the new demand that will come from these new industrial complexes that exist across the US. So, rail is something that we'll definitely pay attention to here. My second post this week was about Starbucks, and they fired their CEO, as you probably heard. And I wrote a moderately goofy post about when any high profile publicly traded company fires their CEO, you basically get some variation of the same press release, which is them thanking the CEO that they just fired for their service and their contributions and talking about how excited they are about where the company is and where it's going to go, and then announcing their new CEO, their new executive. And so Starbucks followed that exact same path. Even though this CEO got fired less than a year and a half into the job, the Starbucks stock price jumped over 20% the day that the firing was announced. Clearly, this was perceived, the former CEO was perceived as a bad news leadership style for Starbucks. And yet, even in that situation, Starbucks felt compelled to thank the former CEO for all of his accomplishments. I think they listed 3 different areas where the former CEO had found success there at Starbucks. What I wrote about was all of this is to be expected, that when you are publicly traded, you have to announce these firings publicly. These executives that are getting fired have a huge amount of resources, strong personal networks, attorneys that are looking for reasons to try to file a complaint against the company that just got rid of the CEO. So it's a very delicate tightrope walk of a communications exercise. And Starbucks just happened to be the most recent example. Something I alluded to in the post also that I will probably write about more in the future is the CEO that just got fired at Starbucks was handpicked by Howard Schultz. The CEO that got fired at Disney at the end of 2022 was handpicked by Bob Iger. So you have these transformative, visible leaders that had achieved enormous success at these places, handpick their successors, and their successors end up getting fired in short order. And what I'll write about in the future is how difficult it is to show really good judgment around personnel. That in fact, it might be more difficult to place a great CEO than it is to execute a great M&A transaction. So things I'll cover in the future, but the Starbucks news this week was notable. Another thing that I wrote about, I did a post this week on Foundations of Energy, my Substack newsletter, and I wrote about return on capital and what that means for energy companies and why we pay as much attention to return on capital there. Why these heavy assets are even more important for energy industrial companies than they are in other sectors of the economy. Walk through some of the basics of what we even mean by return on capital, focus on the return bit, focusing on the capital bit, different measures of capital, different measures of returns. So I wrote about all of that over there at Foundations of Energy, which is the learning and development tool that I've built for all professionals in the energy and industrial sector. So if you haven't checked that out, I definitely encourage you to do that. Each weekend, I send out a free weekly newsletter that I call the Business of Energy that includes links to and summaries of all the research that I published online during the week. That way you don't have to rely on social media algorithms to find all the stuff that I'm sharing. I also include an energy-related anecdote, insight, or observation that I don't publish anywhere else. That way, even if you've seen everything that I've happened to publish online, you'll still have something new to read in the newsletter. If you haven't checked that out, there's a link in my profile. I'll also put a link down below. As always, thanks so much for reading, liking, commenting, watching, all of it. I really appreciate it. I hope you had a fantastic week, and we will talk soon.